Trilicon Digital is the home of innovative entrepreneurs. It is a DAO that aims to revolutionize the manner in which entrepreneurs build businesses and enables digital wallets to become a branch of venture capital by allowing users to fractionalize corporate ownership and become shareholders. For additional information, please contact us on any platform. Today, we will discuss DAOs as venture capital. Let's get to it. When raising capital, VCs have traditionally had the most success with venture capital, but what happens if a new entity called a DAO enters the room? We believe that a DAO will compete with how some firms raise funds. A DAO that seems to be reshaping how money is raised is Trilicon Digital, a private equity DAO aiming to scale up small and medium businesses. This makes them different from VCs and places them in a unique situation. The focus of venture capital is on companies with rapid growth, whereas Trilicon Digital will concentrate on enhancing the profitability of companies that are already profitable. This includes all baby boomer-owned businesses for sale each year. Over 200,000 companies will be for sale. This provides Trilicon Digital with over 200,000 opportunities to make profitable transactions. Jermaine Van Ryck, the founder of Trilicon Digital, responded as follows when asked why he does not target high-growth startups. We do not only acquire companies, but also create our own. We believe that companies we create have high growth and high value, so there's no need to target other companies. In the end, this is a competition, and if we see a promising startup in an accelerator, such as the next Uber or Twitter, we believe that if we create a comparable company, we will grow twice as fast with half the effort. And he added, Trilicon Digital also provides a means for small and medium-sized businesses to acquire capital and expand their operations. Before us, the only way for these businesses to obtain the necessary funds was to obtain a loan. When a company is not making money and the founder decides to borrow money to become more profitable, this typically does not end well for the founder. Therefore, we created an alternative method we believe will work. Now let's compare DAOs and venture capital in greater detail. A DAO is a decentralized independent association governed by its members instead of a central leadership commission, so it is the antithesis of a hierarchical organizational structure. Members contribute to the success of the DAO through an assortment of fiscal price structures. While venture capital is an association that invests in a startup in exchange for a portion of ownership in the form of equity, they only invest in high-growth startups. During a crucial phase of a company's growth, a VC firm can provide active support in critical areas such as legal, tax, and labor force matters. This is especially important in these areas. With venture capital, founders will often lose control, and fast. DAOs versus venture capital. The disadvantages of equity backing in general can be exacerbated by venture capital backing. It could be compared to equity funding on steroids. With a substantial influx of capital and professional, and possibly aggressive, investors, your VC colleagues will likely want to participate. The size of their stake may determine how much influence they have over the company's direction. Traditional venture capital has issues, as it is not inclusive, and decision-making is not centralized. Institutional investors view VC as a highly liquid asset class. Loss of control is one of the most significant drawbacks of venture capital, despite the fact that faster growth is a significant advantage. DAOs are rapidly gaining a reputation as a genuinely effective alternative to venture capital firms. One of the benefits of DAOs over conventional venture capital is that they are more accessible to average investors willing to join the investment cooperative. While contributing to VCs is a more complicated process for investors, it's generally edict investing and is frequently accompanied by a lengthy KYC, know your customer procedure. DAOs accept a diverse range of individuals regardless of their location or investment size. Members of the DAO also serve as ideal client development groups as they diligently provide product feedback, bootstrap the liquidity of systems, and invest in marketing behemoths. The cherry on top is that all this can be done without the founder losing control of the company. DAOs making venture capital moves. Recently, DAOs have formed to acquire a US-based professionally accredited golf course. Now they're planning to invest in cryptocurrency startups, a move that could dismantle the venture capital funding model that has financed waves of new technologies for generations. Additionally, the DAO Trilicon Digital has already begun creating startups and has acquired over 10 businesses, plus 40 acres of land and small portions in businesses ranging from liquor companies to sports teams. DAOs may be the blockchain's solution to the problems in venture capital investment. DAO protocols provide a mechanism for community investment, allowing systems to find funding without surrendering shares to a single large pot. DAOs combine Web3 ethics and the seamless functionality of smart contracts for investors who believe a specific investment community can pool capital to form a fund. DAOs enable communities to accept fees, such as advancing rights on a protocol while investing in a design, inception, or concepts they support. Depending on the appetite, investors can contribute varying amounts to the DAO, and their governance rights are proportional to the size of their contribution. DAOs still in beta. Investment DAOs are still relatively new to the world, and their effects are still being ironed out, but their potential is incredibly provocative. Decentralized capital means that great ideas no longer rely on the wealthy but are chosen by the community. And with DAOs, such as Syndicate, removing the frightening aspects of the process, more people than ever can laboriously shape the future's options. Why DAOs? DAOs eliminate the need for a VC by allowing community members, those who recognize the implicit value in a design, to provide liquidity to the design and accept a proportional share of the plunder. This means that the commercial heavyweights will have less control, and the community that sees value in a design beyond the bone figure will have more power. DAOs pitfalls. Investment DAOs are susceptible to the same pitfalls as cryptocurrencies, such as a lack of oversight, mismanagement of DAO funds, and the emergence of unproven technologies. In the end, both VCs and DAOs are secure and reliable in their respective ways and for their respective groups of individuals. Their reliability and accountability can be measured on a similar scale. While VCs provide daily reports and sanctioned exposures, DAOs make data accessible on-chain. This indicates that both are relatively open about their conduct. Why Trilicon Digital DAO? This is one of the numerous reasons why individuals select Trilicon Digital. This investment DAO is the only one that solves all of these issues and is gaining a good reputation. The team is highly vocal and the rules are unambiguous, not to mention the fact that their marketplace will enable users to do what they do via an iOS application that will enter beta testing in late winter. Trilicon Digital is the only possible alternative to venture capital. DAOs are indeed a force to be reckoned with. Let us know in the comments what you think about DAOs versus venture capital. Don't forget to subscribe and hit that notification bell to stay updated on any new videos.